as we've learned and gotten better, we've said, you know what, we wouldn't be here if it weren't for some great folks who helped mentor us and teach us. And so we've tried to turn around and do the exact same thing now, and try and mentor others.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Kevin Romney is the founder and managing director of Camino Verde Group. He is responsible for acquisition and development of multifamily properties. Kevin, welcome to the show.
Thank you, Sam. Good to be here with you.
Hey, man, the pleasure's mine. Kevin, there are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
Oh, great questions. Thanks for asking. We started Camino Verde Group about 3.5 years ago. My partner, Mike Ballard, I met with him for breakfast. I was getting ready to sell a company that I had built and had worked on for 4.5 years. And I said, Mike, what am I going to do after I sell this company? And he said, you know, I do the back office accounting for about 40,000 units nationwide. I see how well these folks do that are in multifamily. Let's do that. So I did my due diligence. I said, great, let's do it. And we jumped in. We're currently have about 700 units that we've syndicated that we manage. Also have several hundred units under development that we're doing as well. Where we're looking to go is we'd like to do potentially 4 acquisitions per year and probably about 2 development deals per year. So that's kind of where we're at and where we're headed.
That is absolutely fantastic. I love that. Kevin, I think that's really cool. I mean, I love the clear cut, 4 acquisitions a year. You're looking to do 2 development deals. Before we get into those, though, I'd love to find out, what company or what business were you in before? What was it like growing that company and then ultimately selling it?
So I've been, my background is in accounting, and worked a long time ago with Ernst & Winnie. Worked for them for about 2-3 years, got my CPA certification, but then quickly learned that nobody likes to see the auditor coming. It's not exactly the funnest job in the world. My dad was self-employed, and I decided to be self-employed as well. So I have done several different businesses, some more successful than others. The companies that I enjoyed the most were building a call center business. We had call centers in Corpus Christi, Texas, Dallas, Texas, Las Vegas, New Mexico, and Alliance, Nebraska. Built that company, sold it after about 10 years, did well with that. And then the latest company that I had was a renewable energy company. And so worked on that for about 4.5, 5 years, and was time to spend and sell and do something else.
That is cool. What, I guess, in the renewable energy side of things, and again, I know we're kind of taking a rabbit trail here, but I just can't help but ask, because it's, a lot of people that come on this show, they've come from other industries. They were W-2 employees, and then they would decide to get into multifamily as kind of their exit out. It's rare to have somebody, hey, I've owned multiple companies, and then, now we're going to go into multifamily as a brand new business. On the renewable energy side of things, are there any crossovers or things that you guys bring to your projects that you learned in the renewable energy business that you said, hey, this is something we should absolutely be doing in multifamily?
Well, certainly we learned a lot about energy credits and those types of things, and some of those things are available for multifamily. We have not utilized as many of those in the multifamily industry as we might be able to. But certainly, some knowledge there that potentially is a crossover. One of the things that I have learned about the real estate industry is I wish I'd have gotten involved about 20 or 30 years sooner than I did. That's probably a common theme with folks that you work with, that wish they'd have found this industry and this opportunity many years earlier.
Yeah, that's absolutely true. It's the old phrase. It's like, when's the best time to start? Well, now, or yesterday was the best time to start. When's the second best time to start is now. And I'm probably butchering the phrase, but that's kind of the big idea there. Let's jump into how you guys have scaled, what you've done. I mean, how many years has it been? 3 years ago now?
3.5 years ago.
3.5 years ago. Okay. So you're at 700 units at this point. You guys are looking to do 4 acquisitions per year. What's your strategy? How are you guys taking down deals?
So the very first deal that we bought on market. But once we were able to get that closed and the broker had a level of comfortability with us, we really, from this time forward, probably about 2/3 of the deals that we do are off-market deals. And we prefer off-market deals. We're not competing with lots of other buyers. We generally have a bit more time to be able to get the deal done. And so earning the broker's confidence and him knowing that you can get a deal closed makes it so that he'll bring you his pocket deals and get an opportunity to show them to us first. And then we may only compete with maybe one other person or maybe nobody because he knows that we can get it done. So we've found several off-market deals in that method through brokers. We've also found off-market deals through other methods. As I mentioned, my partner Mike Ballard is a partner in Ascent Multifamily Accounting. They do the back office accounting for many units nationwide, and some of their customers are property management companies. And so one of the folks that they do business with said, "Look, we want to grow our business. We'd like to manage some properties for you." And we said, "Okay, great. Go find a property for us that the numbers work. We'll buy it and you can manage it." And she brought us just a phenomenal off-market deal that's in the Clarksville, Tennessee MSA area. It's actually in Hopkinsville, Kentucky. And we purchased that about next month will be 2 years that we've owned that property. The owner had done some remodel on it, but he had a family that managed it, and so he didn't have the financials and the books really weren't in order to be able to take it and list it with a broker. So we were able to come in. We made a good offer that was good for him, good for us. We've since continued to improve it. We've been able to bump rents, and recently we were able to refinance it. And in the appraisal, we had a pretty significant bump from what we had originally paid for the property. But that was just a phenomenal purchase that, again, came to us through a property management company. We've had other leads that have come to us off-market deals through attorneys, through insurance agents, and others. And so we prefer to do the off-market deals if we can find them.
Yeah, absolutely. And I think the cool part about your story is that there's not one particular method. Like, man, this is what we always do. We're dialing for dollars, but dialing for off-market deals, whatever it is, cold calling. You guys have found a variety of ways from brokers to, I think really, really creatively just telling somebody that wanted to manage property for you, fine, go find one, we'll buy it, and then you can manage it. So did you incentivize them any more than that? Was there here's 5% of the deal, or here's $50,000 for bringing us the deal, or anything like that?
They were very incented to come into the deal. In fact, the owner of that property management company was also one of our major investors that came in. He just recently sold some property, so he did a 1031 exchange into the property. This was fairly early on. We'd only been going for about a year and a half, and so we needed to raise $4 million in equity. We were a little bit nervous about our ability to do that at that point, and so we had some great mentors that we have worked with. A wonderful mentor down in the Austin, Texas area. We brought the deal to him, and we did a joint venture with him, and he was able to help bring some of the money in as well. And it was just, it's just a phenomenal deal. They were able to manage it. They've done a phenomenal job managing it. When we refinanced, we got a fantastic deal. We refinanced just before interest rates started to go up, and we were able to get 10 years interest only at 3.35% interest. So that's now kind of a legacy property. I don't know that we're ever going to want to sell that one. We're just going to hang on to it and let it cash flow.
Yeah, for sure. Tell me this, from the time that you guys got it under contract to the time that you knew you were going to have the equity to close, what was that time frame?
That time frame was probably about 90 days. That's generally our standard. Again, we like off market because there's not pressure. If you're buying a market deal, frequently they want you to move a whole lot faster than that. They frequently want you to put up money that's non-refundable from day one. So if we can take a little bit longer to get a deal done, that's what we like to do. This property, we also owner financed it with the owner. And so it wasn't until we refinanced that we actually put agency debt on it, so bank debt on it.
Tell me how. I mean, owner financing is kind of the. I don't know. I'm not going to say it's the best of real estate, but it certainly is something that a lot of people dream about, just because of the ease of transaction. It's just easier to get the deal done. How did you guys approach the seller? And tell us how you ended up setting that up, and what were the terms and the arrangement such that it made sense to you?
Fantastic question. So on this particular, owner finance is great. We've done a whole lot of owner finance deals on some land that we've purchased up in Ephraim, Utah. We've also done a small property down in Pahrump, Nevada. But on this particular deal, one of the things that generally has to happen for owner finance is that the owner has to own it outright.
Right.
If they've got a bank loan or an agency loan on it, then not very likely that you're going to be able to owner finance that. In this particular instance, this previous owner was very active in the marketplace. He was in a very strong cash position, and so he had paid cash for the property. He wasn't. He had another property that he was going to go into. He was going to do a new development, but he didn't need all of his cash immediately. So what I found is with owner finance, if you just ask questions, don't be afraid to ask. Would you be willing to finance this property, or what is your situation with your debt? What kind of debt do you have on the property? And so with this, we were able to actually create a very nice deal. We financed it for 24 months with, I think, a 6-month extension, and then we had basically step up. So it was, we said, look, we want to make sure that we can cover the payment. It was also interest only. We want to make sure we can cover the payment. And so let's do 6 months at this particular rate. Then 6 months, we'll bump it up by 50 basis points or 25 basis points. And 6 months later, we'll bump it again. And 6 months later, we'll bump it again. And that's what we were able to do. And that gave us the time that we needed to be able to finish out the remodels, do the rent bumps. And it worked out just very, very well for us.
That I like that, and I also wondered how you protect yourself in an owner finance situation. I think you mentioned it there, where you had some time, some extensions built in.
We did, yes,
right,
absolutely.
Right. And at that point, you could, obviously, 6 to 12 months out, hey, this is coming due, and we can figure out a way to refinance this in that time frame. That's very, very cool. So we've talked a little bit about finding off-market deals. You talked there briefly, I think, about taking this deal, the $4 million in equity that you needed, and you then took the opportunity to one of your mentors in the industry. And they joined you on this project. Tell me about that conversation, how you picked your mentor, and then maybe if you now are mentoring other people as well.
Sure. Thank you for asking. So one of the things that we do regularly is we travel and go to real estate conferences around the country. My partner had knew this gentleman who is out of Austin, Texas. He'd known him for quite a while. And so I met him at one of the conferences, and we talked and we chatted. And, after a few months after the conference, I was just very bold, and I just called him up and I said, look, I'm new in the industry. I don't know everything that I need to know. And would you mentor me? I just came out and said, would you mentor me? I was a little bit nervous, but he came back and said, yeah, I will. And so we actually had a weekly call scheduled every week at a certain time. And he'd spend, sometimes it was maybe 10 minutes. Sometimes it was maybe 20 or 30 minutes. And I'd just fire off my questions and say, well, okay, what about this? What about that? And it was just phenomenal. He was fantastic. It worked well for him because we were able to when we brought this deal to the table, they benefited. I learned an incredible amount in dealing with them and working with them, and still do. They're just phenomenal partners. And so, as we've learned and gotten better, we've said, you know what, we wouldn't be here if it weren't for some great folks who helped mentor us and teach us. And so we've tried to turn around and do the exact same thing now, and try and mentor others. We've got one group out of Minnesota, a couple, husband and wife. They invested with two of our deals here in Las Vegas. And And they said, you know what, we think we're ready to try this on our own, but we don't quite know everything we need to know. Would you work with us, and could you mentor us on getting a deal? So they brought us 48 units that are in Des Moines, Iowa, and we helped with guaranteeing the debt, securing the debt, underwriting it, analyzing the project, helping raise the equity to get it done, and partnered with them. And that's been another great property for us. We've got another, I've got a call later today with a group out of Buffalo. It's the exact same thing. They invested in property with us in South Carolina, and they've said, hey, can we, we'd love to have your opinion on this deal, and maybe work together on it. So it's been great to be able to mentor other people and help them just as we were helped.
Man, that's awesome. You said there that you learned an incredible amount from your mentor, especially taking down that first deal. What are 2 or 3 things, as you go back, what are 2 or 3 things that come to mind when you say that?
Certainly a lot of experience. And so they were, he was able to share with us, how to deal with certain situations. We had some of the properties that we were managing here. We had some bumps in our asset management, and I asked him, how do we do this? How do we do that? And certainly was able to give us some good advice. But I would say the main thing we learned from him is confidence. If you've got a good deal, press forward. Get it out there, show it to folks. You'll be able to raise the money. But I'd say that would be the number one thing is confidence, and sharing contacts that he had in the industry as well.
There's nothing like confidence that instills more confidence. I think, and especially as it pertains to investors and investor conversations, as I say on this show way too many times, there's 2 things we need: deals and money, right? Uh-huh. So when you're talking to investors, if you're not confident, or if you're just wondering, man, I don't know if I can get this deal done, you convey that unintentionally, I think, in those calls. But when you have a deal that's good and you can raise the capital, and you're like, hey, this is the opportunity, get in or don't get in, it's totally up to you. I find that the floodgates just open up when you can walk into those situations confidently. So I think that's a really cool thing. What's something that you help inspire? I guess, you talk about these other deals, one in Des Moines and one in Buffalo. How do you help your now people along in kind of inspiring that same confidence?
Well, we just try and do the same things that other folks did for us. First of all, we underwrite the deals and make sure that they look good. And if they do look good, and we feel like we can project a good rate of return to our investors, we share that with them. We help in the negotiations. We certainly come in and help with the debt if necessary, to be able to guarantee and lend balance sheet strength. But again, we just share with them, hey, this is a great deal. Let's go talk to your friends and family and high net worth individuals that and let's get the deal done, and let's have confidence in approaching them. And you're absolutely right. If you don't have confidence, investors can sense that in those conversations.
That's absolutely for sure. One last part of this conversation I really want to spend a little time on is development. Development is kind of that for a lot of us, myself included. Maybe I just project, I don't know. But development is kind of that, like, oh, that's the next level, and that's a little bit harder with a little bit more hair, and there's more risk involved. How have you gotten involved in development deals, and what are you working on right now that you say is a development opportunity that makes sense?
So the first development deals that we got involved in, we just have a small slice of the GP on a couple of projects down in the LA area, and they needed some. We were able to come in and contribute with the capital that was required to get those deals done. Then, as we went further down the road, we began about 140 acre master planned community in Ephraim, Utah, which is about an hour and 15 minutes south of the Provo-Orem area. We were able to accumulate a lot of land that we were able to purchase on seller finance from some of the farmers and individuals, sometimes second and third generation owners of land there, and group that deal together. And we have some townhomes there that are under construction, and then we're working on 279 units here in Las Vegas as well on an active living, senior living scenario. But you're very right. Development is very different. It's higher risk. It's a long time to be able to generate income. And so, we try and do them hand in hand, because with acquisitions, you've got cash flow on a monthly basis, you've got acquisition fees, those things can provide the cash flow necessary. And then the development, which takes a lot longer, the runway is a lot longer to get one of those things up and going. And you've got to spend a whole lot more cash to get it to the point where investors can invest in it. So it is a little bit of a difficult switch. We're still in the initial phases on the development. Things are going very well for us. But yes, it's a different mindset, and certainly a longer route to cash flow.
Is there something or a resource that you use that help educate you on development? Is there a website? Or is it just networking and talking to people who are further down the path than you are?
So some of the partners that we've brought into some of our deals have some pretty deep experience, and we feel that that's kind of the key as we do development. We want to partner with those who have been there and done it and have that experience. And if you bring those folks onto the team as part of the GP, that's kind of the key. And we've brought on another partner into Camino Verde Group, who has a whole lot of construction experience and development experience. And so we just feel that's the key. Is there's a lot that we don't know, and we don't want to get in, step into any pitfalls or anything like that. So bring on folks who have done this before and know what to avoid, and lean on their experience to move the deal forward.
That's awesome. Absolutely love it. Kevin, thank you for taking the time to come on the show today and tell us what you guys are up to and how you've done it so quickly. Absolutely inspiring. So thanks for doing that. If you could rewind the tape 3.5 years, which I think is how long you said you've been in it, what's one thing you would do differently if you could?
I think that we would, we mentored and we partnered, I think, and we did well at that, but I think we could have done more, faster, quicker, sooner. And so I think partnering and bringing in more expertise sooner would probably have been a good move that would have helped us grow even faster than we have.
That's awesome. Cool. Thank you for that. Certainly appreciate it. Kevin, if our listeners want to get in touch with you or learn more about you, what is the best way to do that?
So you can check out our website at www.caminoverdegroup.com. And also would love to take any emails or inquiries. My email is kevin@caminoverdegroup.com.
Awesome. We'll make sure we put that there in the show notes with the correct spelling on that for CaminoVerdeGroup.com. Kevin, thank you again for coming on today. Certainly appreciate it.
Sam, it's been a pleasure. Thank you very much for having me.